Hello and welcome to the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's guests are Steve Freed, Vice President of Grain Research, and Alan Bush, our Senior Financial Economist here at ADM IS. And now my first question is for Steve. The USDA surprised the market with a bearish September 1 soybean stocks report. Soybean prices traded lower. Will this trend continue?
I'm afraid that it might. It's just because there's not a lot of buyers underneath the marketplace. And so far, China has been really slow in adding to soybean export sales. And then we still have the October crop report that we have to get through. And it'll come out bearish. They'll add this 80 million bushels to the carryouts. And I don't think they'll adjust demand to offset that. And world stocks will go up. And so really the only thing that is next that could be friendly to support the prices would be some kind of weather problem in South America, which is about a good 60 days away from us trading. So I would think that there's a chance that we could continue to trend lower in soybean prices.
And the USDA wheat report was bullish. Do you see this continuing? And should end users add to 2020 corn and wheat coverage?
I think so, because the U.S. crop was smaller, especially in the winter wheats. We're hearing about Russia putting an export quota starting January 1st, and Europe still has more feed wheat than milling wheat. So I think that there is a chance that we could trade closer to $8 on the nearby Chicago and Kansas City futures until we know more about how many acres we're going to plant next year. Plus, in La Nina years, there's a tendency for the U.S. Southern Plains to be drier than normal. So we might get some rain there next week, which will be helpful, but there is some concern about dryness in the Southern Plains in 2022. And I think, yes, as far as corn end users and wheat end users, they should add coverage for 2022.
All right, Steve. Alan, in recent days, the vast majority of articles on the outlook for stock index futures have been bearish. What is the significance?
Well, we're seeing actually quite a few articles that all of a sudden many analysts are turning bearish. And I think it is a true axiom that commentary follows price. So a lot of bearish sentiment, but in fact, so much now that I think we may be close to some type of bottom in the indices. Of course, we're lower today, and this negative feeling may persist for a while. Of course, we do have a lot of geopolitical events that are dominating, taking the stock index futures lower. But from a contrary point of view, I think that ultimately we'll see the interest rate environment dominate. And of course, with these articles so negative, probably too negative, I think that we are getting close to a bottom in the indices.
Okay, and what is the price outlook for the dollar index?
Well, the dollar index just last week made a new one-year high. Much of this linked to ideas that the Fed may be withdrawing some of its accommodation, possibly in the form of tapering its asset purchase plan, possibly to be announced at the November meeting. So with that being the backdrop and the possibility of less accommodation, that should underpin the dollar, I think, between now and when the Fed meeting takes place, and that will be on November 3rd. So look for overall continued dollar strength.
And can central banks continue to withdraw accommodation in the face of a weakening global economy?
Well, I think they can. But as time goes on and into next year, I think it's going to be more and more difficult for the Fed and other central banks to withdraw accommodation as the global economy appears to be slowing. In fact, it was the second quarter GDP that came in at 6.7%, and that was a good rate of growth. But many analysts are now downgrading their estimates for the third quarter GDP. In fact, the Atlanta Fed changed their outlook for third quarter GDP growth from 3.2% now to 2.3%. Also, we're seeing major banks doing the same, downgrading. So as we move on into next year, I think it will be much more difficult to take away the accommodation as we have seen this year. And in fact, I would not be surprised for later next year for central banks to actually be reversing what they have done and possibly even adding more accommodation. Of course, that would be much later next year, not to be the case this year, however.
Thanks, Alan. Back to the grains. Steve, what is your latest update for U.S. fall, winter, and spring 2022 weather? And will this impact prices?
Well, I think, first of all, in the fall, we're having good harvest weather. The latest information that came out as far as the winter is concerned is that the eastern half of the United States could be colder than normal. And the Farmer's Almanac is calling for one of the coldest winters on record. The eastern third of the U.S. could be wetter than normal, which could mean more snow and things like that. So, with some of the concern about lower energy stocks, that could offer some higher price action for natural gas. And then we have to just watch inflation and see if that spurs any buying in the energies or even in the grains. The spring is supposed to be very La Nina-ish, which means the southern third of the United States will be drier than normal, while the northern third may be wetter than normal. So it's complete opposite of what we saw this past year. So we just have to watch really closely and see if that affects winter wheat conditions and what farmers plant in 2022 as far as crops are concerned.
Well, thank you both. Appreciate your time. And remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. If you'd like more information about our brokerage services, please visit admis.com.